A Silicon Valley investor event catches the eye of Tinseltown, attracting Hollywood heavyweight Ashton Kutcher and his wife, Demi. Hello, I'm Chris Cashman. Welcome to News on Main, the place to get connected with the latest small business news. A unique Northern California incubator starts its winter cycle this week. Twice a year, Y Combinator invites batches of early-stage startups to Silicon Valley, provides them each a small amount of seed money, and works intensively with the founders for 3 months. In exchange, they get a portion of each company's equity. In Smart Business, Y Combinator partner Jessica Livingston explains what they look for in startup founders.
Primarily, we're looking for determination. Are these founders going to stick with it? Are they going to be able to endure all of the tough things that come up with startups? Are they good enough friends to weather all the storms? Along with mentoring, they give each startup an average of $18,000. The founders must relocate to Silicon Valley for the 3-month program, but by design, they don't get an office at the incubator. We don't want the companies working here. If you look at all of the successful startups in the past, all of these companies started working out of a garage or their apartment. When you're at the earliest stage, you don't want to have to feel like you're coming into an office. At the end of each cycle is Demo Day, where founders get 2.5 minutes to pitch their idea to hundreds of the country's top investors. A second day was added to the event because so many investors wanted to attend, including some Hollywood stars. At the last Demo Day, Ashton Kutcher came. He likes to do technology investing, and he's invested in a few of our startups. But the important thing about this is I think that investing in startups is becoming much more mainstream. It's not just limited to something that a closed group of investors in Silicon Valley do. Recent graduate of Y Combinator Steve Huffman ran a successful online social news site called Reddit.com, which he sold to publishing powerhouse Condé Nast in 2006. Now Steve is a co-founder of a new travel search site called Hipmunk. With billion-dollar players like Expedia dominating the online travel space, Steve knew cracking the industry would be an uphill battle.
It's a very hostile space for startups. It's an insider's business. The airlines don't move very fast. The existing players don't move very fast. So the challenge has been basically getting people to talk to us, just picking up the phone. Our strategy has basically been persistence. We just call and call and call and email and just keep going until somebody gives us the time of day.
Hipmunk recently closed a round of angel funding and signed a deal with ITA for flight search data. Y Combinator is funding 42 startups this cycle, ending with Demo Day in late March. In small business news, the Federal Reserve says lending to U.S. small businesses fell in third quarter. Good news is, according to the Fed, it was the smallest decrease since the lending squeeze started in the beginning of 2009. With the credit crunch still lingering, entrepreneurs are finding unique ways to fund their businesses. There's a new concept gaining steam called royalty financing, where a company pays back a loan using a percentage of its revenue. In Main Connection, the founder of tech startup Big Door Media reveals why it worked for them.
So initially we were attracted to royalty-based financing because we saw it as a way to bridge the valuation gap that we had with our prospective investors at the time. The concern for me was whether or not we were going to be able to have the revenue to be able to pay back in time. We ended up converting our royalty-based financing into our next round of equity financing.
We've uncovered more unique ways entrepreneurs are finding capital in our new article, Alternative Funding Sources, at businessonmain.msn.com. And that's your News on Main, the place to get connected in small business. Thanks for watching.